lots and more to what all of this means for our market here in Australia. Chris Weston, IG Chief Market Strategist, joining us from Melbourne. Obviously, Chris there, always eyes on the big horse race, of course, too. But, I mean, you can't ignore what's going on in the markets. Very interesting moves there in the end for US stocks as we watch that oil price take a tumble.
Well, I mean, it's good deflation. I think that's the way you've got to look at it, and it's certainly been the talking point. The energy sector in the US was down, well over 1%, and I think that probably could have some further ramifications on our market. Yeah, I think the WTI crude price trading below and closing below $80 for the first time since 2012. I think probably the big story for me of what happened last night was the continued divergence we're seeing at a central bank level. The ECB were fairly vocal last night. We heard from Mr. Nowotny, who's one of the board members there, seemingly warming to the idea of quantitative easing at a government bond level. And I think one of the big interesting points that certainly I've been asking is would they actually go down the road of looking to share or buy sovereign debt in line with their contributions towards the capital contributions towards the ECB. And here Mr. Nowotny actually gave further clarification on that. And that suggests that we should see, if we do get a clear sense that that's going to materialise, we should see massive outperformance from German bonds, given the contribution that Germany has there. We also saw Mr. Draghi talking more openly about the levels of asset-backed securities they can buy, how much covered bonds they've been currently buying, which equates to just under 5 billion euros so far. So I think if you look at that, but then if you look at the data front, it was all about slight weakness in the European PMI series. They are still in expansion, although we did see German coming under a little bit of pressure, and Italian PMI going back into contraction as well, against what we saw in the US, where their PMI series, their manufacturing numbers were very, very strong there. The new order subcomponent was very strong going into 65. So again, you're seeing that expansion or that divergence at an economic level. You're seeing that divergence at a central bank level, and the dollar was just another standout. We saw the dollar yen going up to that 114 figure, and it's going to be a very, very strong open in Japan today. We're calling that market up over 5% on open. So yeah, fireworks in Japan again today.
Yeah, after that holiday yesterday. Just on what you're seeing then in those currency markets, as you mentioned there, the greenback strength. At what point though does the Japanese stimulus efforts, ramping up of that, start to again boost that carry trade and see the Aussie benefit? I mean, does that outweigh the US dollar strength? I mean, how does all of that play out for our currency?
Well, against the yen, it's going to do very nicely, to be honest. I mean, as long as volatility in all asset classes stays subdued, if you look at the VIX, if you look at the JP Morgan FX volatility index, as long as that index stays low, and global equities continue this sort of slow grind higher, you are going to see the Aussie yen appreciate as people look to be paid to be in those positions. The other one which works very nicely in line with what we see in lower volatility is being short the euro against the Kiwi dollar. That has a very strong correlation with falling, or negative correlation with falling in volatility as well. That's one you can look at. So I think Aussie yen is one you look at because Japanese are going to want to find homes. If you look at this big outflows we're going to see to foreign bonds, it's not just about a domestic equity story where they're boosting that to a midpoint of 25% on the GPIF. There are going to be a lot of buyers of Aussie assets, and we know that a lot of these are going to be unhedged, but we do know that there's going to be about nearly 120 billion US dollars of outflows from Japan based on these changes to the GPI portfolio. So there will undoubtedly be money being put to work in the Australian capital markets here. So I think that's one to look at. But volatility is key, and investors and traders change their investment theses and what they buy and what they sell based on volatility. And right now, volatility has been calmed quite nicely by the Federal Reserve, by the ECB, by the Riksbank in Sweden, by the Bank of Japan, and potentially today to a degree by the RBA, although I'm slightly sceptical of that. But certainly central banks, when they speak, the market acts, and volatility right now is falling, and you need to change the way that you invest and trade around that.
Yeah, because there seemed to be a bit of a view that maybe the RBA today is a non-event. But do you think, I mean, we're hearing earlier from James White at Colonial First State saying, look, I mean, they may want to come across very dovish, so, don't discount that.
Yeah, well, let's have another view. I mean, Barclays is saying that there's a possibility we may actually see them change their forward guidance today, which actually would be very positive for the Australian dollar. I really can't see in any shape or form why they would do that. If you look at the data since the last meeting, consumer confidence, well, the October read was up slightly, but it's still very much only just above the post-budget lows. The unemployment number for the last reading was down 30,000. Inflation, if you look at that on a headline basis, was getting down towards the bottom end of their range at 2.3%. The trim mean, the one they look at, right at 2.5%. There is really no reason why they'd look to change. If you look at the Australian dollar, on a trade-weighted basis, which I think if you look at the previous statement is what they're trying to make us look at more closely than the Australian dollar against the greenback, that's actually up about 0.4% since the last meeting. So from a currency perspective, we know it's high by historical standards. If you look at the falls in the key commodities, you know, they continue to decline. The iron ore price was down 1.2% last night, down at that $78 mark. So for me, there's not a lot of reasons why they would look to change anything from this statement. I think it's going to be a very boring statement. I think they may mention the volatility we've seen in the market, and you know, I think it's business as usual for the RBA. Are they going to come in and join the Riksbank and the Bank of Japan, the RBNZ, and become more easy? I really don't think they will do. I think they're quite happy where they are at the moment. I think it's going to be a very boring statement, to be honest.
Okay. All right, just then for your call, I mean, and you know you were saying there you expect the Nikkei to open up around 5% coming off that holiday yesterday. What's your call for the ASX 200?
Flat.
Okay.
So it's, if you want excitement, look in Japan. If you want a flat open, you know, stay in Australia, but then, you know, obviously gravitate towards some of these economic releases. The currency is going to be much more in focus today than what we're going to see on a headline basis. Of course, the Japanese market was closed yesterday, but the futures were open and they traded both on the CME and also the Singapore exchange. Most of the liquidity going through the Singapore exchange. But if you look at Japanese futures, yeah, we should see that market, as I say, open 5.3%. We've got that market opening around 17,300. So, you know, I think if you've been away for the last few days and you hadn't seen what was going on in Japan and you looked at that market, you'd be going, crikey, what's happened? But, you know, you'd love to have been long that market. But yeah, I think if you look at the opening calls today, the BHP, for example, the ADR is fairly flat. The banks, there's no reason to be putting any kind of major volatility in that market today, certainly on the open anyway. But you know, if you look at dollar yen and the leads from the futures, dollar yen's up 300 points or so from where the cash market closed on Friday. Yeah, it's all about Japan. Unfortunately, we don't have a very strong correlation with the Nikkei. If we did, then certainly our market would be a lot higher than where it is now.
Chris, really appreciate that. Yeah, as you said, lots of data points to be watching today, including, of course, the RBA a little later. So we'll check in with you throughout the day. Thank you for that.
Thanks.
Chris Weston there from IG.